Hello everyone, here are the latest market news on November the 3rd, 2020. European stocks are up, all eyes on US elections. European stock markets saw openings earlier Tuesday as investors hailed the end of the US president's controversial campaign in hopes of ending political uncertainty. German DAX futures rose 0.5%, France CAC 40 futures climbed 0.8%, and UK FTSE 100 futures rose 0.7%. Confirmed on Tuesday, although nearly 100 million American voters have already voted. Recent polls show Biden has a significant lead nationwide, but polls in several key wavering states look much closer. In addition to the political events in the U.S., investors are looking forward to a busy week of the meeting of the Central Bank and the Bank of England, as well as the publication of data on U.S. employment in October. Meanwhile, European leaders are desperate to stem the outbreak of the virus before Christmas. The UK, France, and Germany, among others, have introduced partial blackouts in the past few days. Lenovo beats revenue forecast on demand boost. China's Lenovo Group, the world's largest PC maker, posted better than expected quarterly earnings on Tuesday and said it continues to benefit from its new normal remote work since COVID-19. The company said it had set new records for group revenue, pre-tax profit, and net income, and all three key business groups posted annualized growth for the first time in 6 quarters. Lenovo predicted that net income for the quarter ended September rose 53% to $310 million, beating the analyst average of $224 million. Revenue increased 7% to $14.5 billion. With the pandemic forcing companies around the world to look for work-from-home options and people choosing to stay at home, the company expects to benefit from increased sales of PCs and tablets. Lenovo consolidated its leadership in the PC market with 25.7% of the market, ahead of HP Inc. and Dell Technologies, which had 21.6% and 15.2% respectively. U.S. production rises to a high of 2 years. U.S. manufacturing activity accelerated more than expected in October, with new orders surging to its highest level in nearly 17 years amid a shift in spending on goods such as cars and food as the COVID-19 pandemic drags on. The poll conducted Monday by the Institute for Supply Management was the latest piece of important economic data ahead of Tuesday's presidential election. However, production prospects are not easy. The ISM said its industrial activity index in the country rose to 59.3 last month. This was the highest figure since November 2018, and in September it stood at 55.4. However, the spike in activity is likely to exaggerate the health of the manufacturing sector. A Federal Reserve report last month showed factory production fell 0.3% in September and remained 6.4% below the level before the pandemic. RBA Australia cuts interest rates and buys bonds. The Reserve Bank of Australia cut its key interest rate yield curve target and bank lending rate to 0.10% from 0.25% as predicted by the overwhelming majority of economists. The board also said it would buy 100 billion Australian dollars in government bonds with maturities of around 5 through 10 years over the next 6 months. The move demonstrates the central bank's desire to quickly pull the economy out of its first recession in nearly 30 years and prevent unemployment from taking root. In addition to cutting interest rates to a new record low, the continued use of unconventional policy instruments show that the RBA, like its global counterparts, has exhausted its conventional ammunition resource.